Welcome to HanInvest TV, where we uncover the secret financial strategies that the ultra-wealthy use to build their massive empires. Have you ever wondered how billionaires live lavish lifestyles while paying a lower effective tax rate than their secretaries and drivers? It is not about evading the law, but rather understanding a specific framework designed to reward capital ownership over labor income. This legendary strategy is known simply as buy, borrow, die. It is the blueprint for generational wealth used by American dynasties. Today, we will break down exactly how this three-step cycle works and why the tax code favors those who own assets. Most people focus on earning a higher salary, but the wealthy focus on acquiring assets that appreciate in value over time. Let us start with the first pillar of this strategy, which lays the foundation for everything else that follows: the buy. The first step is deceptively simple. You must buy assets that are guaranteed to increase in value over a long period. The wealthy do not keep their money in savings accounts. They invest in real estate, diverse stock portfolios, and private businesses. These assets are chosen specifically because they appreciate, meaning they become worth more tomorrow than they are worth to you today. Beyond traditional stocks, this can also include fine art, vintage cars, or any commodity that holds value against inflation pressures. The magic term here is unrealized gains. As long as you do not sell the asset, your profit exists only on paper. The tax man can only touch your money when you sell. If you never sell, you never trigger a taxable event. This allows your wealth to compound uninterrupted, growing like a mighty tree that is never cut down for its wood. Average investors sell their winning stocks to lock in profits, but the ultra-wealthy understand that selling is actually a failure. By holding on to these assets, you keep the government out of your pocket, allowing 100% of your growth to continue. But if you never sell your assets, how do you pay for your lifestyle? This brings us to step 2, borrow. Instead of selling assets to generate cash, the wealthy use their portfolio as collateral to take out low-interest loans from banks. This is often done through a securities-backed line of credit, allowing them to access cash without touching the underlying principal. They use this borrowed money to buy cars, pay for vacations, and fund their daily lives, all while keeping their stocks. Why do they do this? Because the interest rate on a secured loan is significantly lower than the capital gains tax rate. Crucially, debt is not considered income by the IRS. Therefore, the money you borrow is completely free of income tax. While they pay a small interest rate to the bank, their underlying assets continue to grow at a much faster pace. This creates a positive arbitrage where the wealth grows faster than the cost of the debt used to sustain their lifestyle. Unlike the poor who borrow to survive at high rates, the rich borrow to preserve their capital at the lowest possible rates. They can live like kings for decades, rolling over these loans and letting their asset base expand to cover the debt. The risk is minimal because the loan-to-value ratio is kept low, ensuring the bank never needs to issue a margin call. By living on debt, they effectively opt out of the income tax system that burdens the middle class and high earners. This cycle of buying and borrowing can continue for an entire lifetime, accumulating massive unrealized gains without paying a single cent. But eventually, like all human beings, the wealthy investor must face the end. This leads us to the final stage: die. While death is a tragedy for the family, in the context of this strategy, it is the ultimate tax planning victory. When the owner passes it away, their assets are transferred to their heirs. This triggers a tax provision called the step-up in basis. Normally, if you sold the asset, you would pay tax on the difference between what you bought it for and its current value. However, upon death, the cost basis of the assets is adjusted to their fair market value on the date of death. This means all the capital gains that accumulated over decades are permanently wiped out. The tax liability simply vanishes into thin air. The heirs can sell the assets the very next day and pay absolutely no capital gains tax on the previous growth. They use a small portion of the assets to pay off the outstanding loans the deceased used to fund their lifestyle. The remaining wealth is theirs, free and clear. The government gets nothing from the appreciation that happened during the original owner's life. Then the heirs begin the cycle anew. They buy more assets, borrow against them, and pass them on to the next generation. This is how dynasties are built and how wealth concentration increases over time, protected by the very structure of the tax code. It may seem unfair, but it is the reality of the financial system. It rewards those who understand the rules of capital. So, what can you learn from this? You might not be a billionaire yet, but you can adopt the same mindset. Stop thinking about how to earn more labor income, and start thinking about how to acquire assets that grow without your effort. Educate yourself on tax laws. The system is not broken. It is simply designed to incentivize investment rather than consumption. You can use leverage responsibly. Real estate investors do this every day by refinancing properties to pull out tax-free cash. The key takeaway is patience. The buy, borrow, die strategy requires a lifetime commitment to holding assets and delaying gratification. In a world where cash loses value due to inflation, holding hard assets is the only way to preserve your purchasing power. Do not let the tax system work against you. Learn to make it work for you by changing how you view money. The path to wealth is not a sprint to the next paycheck, but a marathon of accumulation and strategic leverage. Ask yourself, are you working for money, or have you built a system where your money is working hard for you? The buy, borrow, die strategy is your compass. It points away from the trap of labor and towards the freedom of capital. History shows that the greatest fortunes were not made by high salaries, but by owning pieces of the world's economy. Now that you understand the puzzle, you can start placing your own pieces to build a picture of financial independence. It is a steep climb, but the view from the top, free from the worries of daily survival, is worth every step. True wealth is not just about the numbers in a bank account. It is about the freedom and time that assets provide. Open your eyes to the opportunities around you. The game is being played every day. Make sure you are a player. Share this knowledge with your family and friends. Financial literacy is the only way to break the cycle of poverty. Build your bridge to the other side. Do not let fear or lack of knowledge keep you stranded on the side of labor. Start today. Buy your first asset, no matter how small. Hold it, nurture it, and let time do the heavy lifting. The sun rises for everyone, but only those who are prepared will be able to harness its energy for their growth. When you align your actions with the principles of buy, borrow, die, your financial life begins to operate like clockwork. Remember that maintenance is key. Monitor your assets, manage your debt levels responsibly, and update your estate plan regularly. Markets will crash and economies will falter, but high-quality assets have always recovered and reached new highs throughout history. Betting on the growth of the economy has always been a winning strategy for those who have the patience to wait. You are not just building wealth for yourself, you are building a legacy that will support your family for generations. Change your financial DNA. Break the habits of consumption and replace them with the habits of accumulation and preservation. The world is full of abundance. There is no shortage of assets to buy, only a shortage of people willing to start. You now hold the key. The strategy of the ultra-wealthy is no longer a secret, but a tool in your hands. Do not just watch this video and forget it. Take action. Consult with financial advisors. Start planning your strategy today. Rise above the noise of the daily grind. Elevate your perspective and look at the financial world from a higher altitude. Every decision you make is a domino. Make sure you are lining them up to fall in the direction of wealth. Your financial choices today will ripple out and affect the lives of your children and their children in the future. Rome was not built in a day, and neither is a fortune. Consistency and time are the two ingredients you need. Choose the path of the owner, not the employee. It is the road less traveled, but it leads to a better destination. Empty your wallet into your mind and your portfolio, and they will fill your wallet to overflowing for the rest of life. There is a profound peace of mind that comes from knowing you have a strategy that protects you from financial storms. In the digital age, access to these strategies is easier than ever. You have the tools, now you need the will. Let the buy, borrow, die strategy be your lighthouse. Let it guide you away from the rocks of taxes and bad debt. Keep your financial health strong. Do not let the stress of living paycheck to paycheck shorten your life or limit your potential. Break the chains. You were born to do more than just pay bills and die. You were born to create value. The sky is the limit when you understand how money works. There is no ceiling on how much wealth you can build. Ultimately, this is about freedom. The freedom to live on your terms, to give back, and to enjoy your time on Earth. This video is just the beginning of your journey. We have many more strategies to share with you on this channel. If you found value in this breakdown, please hit the like button so we can spread this knowledge to more people. At Han Invest TV, we are committed to bringing you the highest quality financial education to help you master your money. Share this video with someone who needs to hear this. You might just change their life and their future financial trajectory. Join our community of smart investors in the comments below. Tell us which asset class you are planning to buy first. Remember the formula: buy quality assets, borrow to access liquidity, and use the step-up in basis when you die. Thank you for spending your valuable time with us. We hope this video has opened your eyes to a new reality. This is Han Invest TV. Subscribe now to master the game of wealth and rewrite your financial destiny. See you next time.